Amnish Agarwal is joining in. He's the head of research at Prabhudas Lilladher. Amnish, thank you for joining us. If someone has missed the bus on or missed the flight on Interglobe Aviation, is there more to go, you think?
Hi, Sonia. So if you look at, say, Interglobe Aviation, the stock has actually rallied very sharply in the past few months. Now, if you look at in the near term, I think the returns won't happen at the pace we have seen earlier. And there is a very limited incremental scope to increase the market share because they are already at 60%. But having said that, the way the entire aviation industry is poised in India, by increasing the number of airports and all, and now they are also going to significantly push the pedal on the overseas. I think in the long term, the stock will still continue to give you more like a secular returns over the next few years.
All right. Hi, Amnish. Thanks a lot for joining in. What about some of these mid-cap tech names? Birlasoft came out with its set of numbers. There was a bit of a miss on the top line. Margins were a little bit better. But you had KPIT that came in yesterday. Obviously, that's a different segment altogether. But even in comparison to its peers, it did much better. And the guidance that they've given is something that the street latched onto. How are you viewing some of these mid-cap companies that have come out with a set of numbers? And what's the pick of the pack?
You see, if you look at, say, KPI in particular, something like you can say margins being range bound and then growth of around 20%, the guidance looks pretty strong. And given the fact that it is doing very well and particularly the EV revolution or the sales of EV in general are expected to increase, EV and the entire, you can say, this is software stack in the various automobile, I think over the next few years, the company should do well. So if you look at, say, IT, as we discussed earlier also, I think it is only the niche segments which are catering to, whether it is, you can say, EDS, life sciences, auto, EV. So I think only these segments, if you would have seen, the companies have done well, and the traditional segments which related to more like ERP, BFSI, etc., there the companies have not done that great. So I think all the niche companies in IT, they will continue to do better than the traditional companies which have been doing, you can say, which are all across the space. So I think in that, I think all these niche companies, they would actually even outperform the, you can say, the larger peers, at least in the near to medium term.
I mean, valuations are the only thing. I read a couple of notes in the morning on KPIT. It's all the worry, the complaint is about valuations being too high. Otherwise, it seems good. Amnish, morning. Banks had a big move, right? Bank Nifty was up 2% yesterday. What caused it? Was it earnings by ICICI and Axis? You look at flows, right? FIs were not big buyers or anything. They covered their short positions in index contracts quite aggressively. So just trying to kind of decipher what led to that, in your opinion.
The banking is one sector. If you look broadly, it has been the biggest underperformer practically. If you exclude the private PSU banks, the front lines, for example, HDFC, if you compare the stock today with where it was year and a half back, it is actually down. ICICI had not given any good returns. Axis obviously has done well. So in terms of, I would say, banking, there is now a growing consensus that the cut in interest rates is likely to be back-ended. And that will not result in the, you can say, further NIM compression, although most of the companies are factoring in that the NIMs don't be great. Secondly, in case of banks, there is still quite a bit of room in terms of the increase in price to book values, where they are today and where they used to trade 2 to 3 years back. So I think in this current situation where most of the sector, they have been, you can say, the valuations have been moving up, banking is one sector where valuations comfort is there. And so I think particularly ICICI, Axis, etc., where I think there is still some room for the valuations to catch up. The stocks have shown some momentum.
Okay, all right. Amnish, what about Emami? In the last few days, the stock has moved up closer to around 10% approximately. That's a big up move is what we have seen. I think it gets a fair bit of their revenue from rural India. Also, now the prospects of a better monsoon have moved up. The stock is not very, very expensive as well. I think on FY26 earnings, it trades at around 20 times. Any view on Emami? Just the last few days, we've seen a big uptake. I think it's up 10% odd.
Okay, you see, Emami, there are two things. First of all, the more than 70% of the portfolio of the company is seasonal. And as we are witnessing very strong summer in the entire, you can say, Hindi heartland. So some of the products, particularly you can look at say Navratna, Dermicool. So the offtake as well as the stocking of these will be very strong. Now, if the monsoons are also, then you will have Zundu and some of the other products doing well. So if the current season, particularly with regards to the summer products and the, you can say the coming monsoons, these two seasons play out and the outlook of profit growth becomes relatively better over the next, say, in the first half of the year. The secondly, Imami, if you look at the entire consumer pack, the proportion of sales which they get from rural India is perhaps the highest, which is at around say 50% plus minus 2%. So that actually puts Imami in, I would say, relatively a better position if one wants to play the current, you can say, very harsh summer plus the expected uptick in the rural demand and monsoons. And given the fact that the valuations are cheap, I think that there is not much downside in this stock.
Okay, all right. Here, look at it from early April. The stock has seen a bit of a spike up, as Amnish says. Maybe they're well placed.
Amnish, we were just making this point about how there's large delivery buying in names like ICICI Bank. Yesterday, you had almost 1,400 crore of buying in ICICI Bank. Is there still more scope post the strong numbers on that one?
Yeah, definitely, Sonia. As I said, the banking is one sector where you can say particularly the performance of a few banks, particularly ICICI Bank, Axis Bank, they have done particularly well. HDFC, of course, in the transition stage. Now, ICICI Bank is more like it is now, you can say, assuming the leadership position in terms of price to book. And I think at 2.4 times price to book FY26, I think still there is scope for the stock to move up. And I don't rule out it to move further. And I think if the markets have to make new high next year, I think the banking sector in general and private banks in particular will be the key factor to watch out for.
Him. Amnish, I wanted your thoughts on Trent. The numbers came yesterday, which were, somewhere during market close, but they were really strong set of numbers. And this is one stock that has had it very good, right, over the last many days and weeks. At this price, does it still make sense to buy into Trent?
You see, Trent actually has done very well, and the momentum has been led by Zudio. So if you look at the entire apparel space, Trent remains an outperformer. But in terms of valuations, I would say one will have to take slightly longer view because it is not longer that cheaper stock. But in the longer term, if the company continues to perform the way it is with a clear focus on West Side as well as on Zudio, I think in the long term there is still enough scope to make money in this stock. But in the near term, I think it might be now incrementally growing at a low pace.
Okay, all right. Abneesh, I wanted to ask you about MOIL. I don't know whether you track it, but it appears some of these mining-related stocks, they're actually beginning to outperform the ferrous or the non-ferrous names. Case in point being MOIL is done much better. NMDC has done much better as well, but now the price increase has come about. So any view on this? The reason I ask you is because manganese ore prices have been skyrocketing. There's a disruption in Australian mine on manganese ore, and because of that, prices have moved up. MOIL as well has seen a big rally. More in store or most of it in the price?
You see, difficult to say because we are not, you can say, tracking the stock very closely. But having said that, now these commodity stocks, for example, particularly the mining stocks, the moves are generally led by what happens globally. And now, as you are saying, there is disruption in the mining. And if this disruption continues, say, for the coming few months, then there effects to the stock. But definitely the move has been very sharp over the past. I think it has happened in the last 10, 15 odd days.
Amnish, just two more names. One is Supreme Industries. Earnings were pretty good. Stock ended, I think, 7-8% higher. Big volumes as well in trade yesterday. The other one was BSC, which went the other way. Sharp cut, ended 13-14% lower. Just your thoughts on these two.
You see, Supreme actually has been gaining a lot because of this tap water scheme, that is your Nal Se Jal scheme of the government. So they are getting actually a lot of orders due to that. So the volumes have been pretty good. And I think if you look at the entire piping space, I think two companies, Supreme and Astral, they have been doing very well. Now, given the fact that I think it all depends upon how much could be, you can say, the incremental spending as far as this particular scheme goes. Now, if the spending under this scheme particularly it continues to go, I think Supreme should continue to do well. And this is one company, if you look at it, has been one of the most steady players. So I think from that angle, it continues to look interesting in the long term. However, the move yesterday has been pretty sharp. As far as your BSC is concerned, I think it is more to do with the, you can say the penalty which has been imposed upon them and they have been asked to pay. So I think this is more like you can say one-time event which has resulted in the cut in the strong price. The long-term fundamentals or the views on the stock, they pretty much remain the same.
Okay. I wanted your thoughts also on M&M. There's a new facelift that they've announced of the XUV 300, right? Attractive price point, about, the base price is around 7.5 lakhs. And in this segment, they are planning to sort of strengthen their entire offering in this SUV space. They, of course, do have the Thar, they have the Bolero, and now a facelifted version of the XUV 300 as well. How are you positioned on some of these names? The other major player in this space is Tata Motors. Of course, they have almost a 30% market share here. But in this SUV space, would you take fresh positions in names like M&M and Tata Motors?
You see, M&M seems to be very well placed because they have been doing well, particularly last year. If you look at the only two segments they did well was, one was your these are SUVs or PVs, and the second was your commercial vehicles. Now, I think if you are going to strengthen your presence in the entry to mid-level segment, which has been actually growing very fast and has replaced the lower segment of the, you can say, the entry-level cars, I think that is one space. If they strengthen over there, it is very big positive for M&M. Given the fact that now you will be strengthening your portfolio on the your PV side, plus this year monsoons are likely to give a boost to the tractor segment, I think M&M should do well from here on. Now, as far as Tata Motors is,
Go ahead.
So now, as far as Tata Motors is concerned, I think your commercial vehicle segment is not likely to show any spectacular performance over the coming, say, 3 to 6 months at least. However, given the fact that PVs are doing well and the JLR numbers are also likely to be better, the Tata Motors stock should do well from here. But I think clarity in terms of the performance, that seems to be better in terms of M&M.